All right, day, YouTube. Good morning, whatever time it is when you see this video. Welcome back to the show. Um, Question: should you continue to stack during these perilous times where prices are increasing rather drastically compared to what we're kind of used to with basically no pullbacks, right? I don't know if everybody's paying attention. Anybody that's stacking probably is paying attention because it's hitting the wallet pretty hard. Um, But to answer the question, kind of shortly without dragging this out, it depends. Everything depends, right? Um, it really depends on your plan. And are you dollar cost averaging, or are you kind of just buying as you see opportunities for uh, price valuation, and little dips to get the most bang for your buck? Like if you're looking for one hits, if you're looking for dips to buy, I don't know, 20 at a time or whatever, instead of dollar cost averaging in, and, just being committed to a purchase every month, every week, or whatever your plan is, to buy a little bit at a time, just to consistently do that, like you would do with most quote unquote investments. Um, I would say if you're, and I guess this is kind of what I'm doing, or I'm planning to do, continue to buy what little you can, because the dollar is not going far at all. We'll see what happens with the jobs numbers today and the numbers that come out, and how much higher the price goes. We're getting really close to 50. It looks like pretty quickly, rather sooner rather than later, which is kind of shocking. Um, but if you're committed to, let's say, $100 a month, and that's what you've been doing forever, I would continue on that plan, just like you would with any investment. Pretty much, most people that delve into their 401ks just dump all that money into their 401k and never touch it, never look at it, never know what's going on, never look at the market until it's time to get it out. I would approach it in a similar manner to that, to continue to build up your stack, your wealth, preserving your wealth, preserving what little savings you might have in this time of rapidly rising in inflation, it would appear. Um, if you're looking for those one hits and looking to buy a bunch at a lower price at one time, I get it. You're not probably, those opportunities might not come around for a long time. I don't know. Um, I think that you really have to evaluate what your plan is and what you see for the future, because you have to look at what's your premise. Why are you buying, and why are you, in particular, investing in, let's say, silver and gold, if there's no gold here, but that as well. Um, why you're doing what you're doing, and what you see as the future, and why this is important now versus other assets. If you do pause, what are you going to put those assets? What are you going to put those dollars somewhere else? What are you going to do with them? Where else are they going to go? Just to pause and not do anything with the cash seems kind of um, reactionary. I'll put it that way. Reactionary. Reactionary for maybe not such a good reason. So I would definitely look at continuing what you're doing if you're on a scheduled way. If you're kind of a one shot, once every 2 months, I get a tube or as many as I can buy with the dollars I've saved up, like, still look for opportunities, look for deals, but I wouldn't stop, because the premise hasn't changed. The dollar is not gaining value. The government is not stopping spending. I think it's Peter Schiff that said this, and I think another guy kind of follows along with it, or maybe they play off each other. But basically, um, yeah, I'll stop doing this, buying these things, saving this way. When the government gets responsible spending, the government lowers the debt. Uh, these things that cause this to inflate, when the government stops doing those things, or the central bank, yeah, then I'll stop buying. If you think those are things are about ready to happen, or the government's going to pay down the debt, the government's going to, be responsible for in their finances and not devalue the dollar deliberately to your own demise, If you think those things are going to happen, it's probably a good time to redirect your funds somewhere else. If you don't think that's going to happen, which if you're watching this video, you probably don't think that's going to happen, I would continue on a measured pace. I would say this year I have went above and beyond my planned goals because of the immediacy I saw in the markets, and the immediacy I saw in the price action. This year, I had, from that 28 to the 35 window, I probably stacked more than I have in any year previously. I had the opportunity, had the capability, so I didn't just limit it to what I kind of normally did. I kind of upped my ante, if you will. I'm really thinking about paring that back. I am going to really seriously, maybe call it a pause, because really evaluate what's going on at $50. We get to $50 to be like, okay, is this going to be a rug pull? Is this going to be, because I have no problem with the small amount that I'm going to be buying over the next couple of weeks, and until it gets to 50, I'm not really worried about the rug pull and those few ounces, a couple dozen ounces, whatever ends up being bought above whatever the price drops to. I'm not really worried about that. Again, because primarily I'm focused on how many ounces do I have. Again, it looks how are you valuing this. Looking at number of ounces versus I have this dollar amount saved up. I can save up dollars in the bank account. I'm not counting it like that. How many ounces do I have? So adding to ounces is important, and continuing that is important. And looking at the valuation dollar-wise is kind of secondary, definitely secondary. So continue to do it, and not so worried about, hey, if the rug gets pulled at 50 and it drops back down to 39, I've only stacked a few dozen ounces above that price. Not a big deal. Dollar cost averaging wise, still way ahead of the whole game in the big picture. And my ounces are higher because I have no intention of, again, most 90% of the stack is for the long term. If there was ever to come up a short-term emergency, yes, you can liquidate what you need. So that's my perspective. I say continue to do your plan, regimented and at a pace that makes sense to you, but don't stop. That's my opinion. That's my opinion. That's my plan, and what I would recommend is don't. I mean, the price is meant to scare all of us. People buying this stuff physically at the LCS or online is not what's causing the price to go up. Your neighbor, but going to the LCS, the big wigs that are buying silver out of SD bullion at a monster box at a time are not the one making the prices go up. It has practically zero effect. It affects some of the prices compared to spot, like especially 90%. Some of that action does affect that. A lot of this is going at spot or below spot just because there's so much of it in that supply line at those locations in particular, or those vendors. But in the big picture, the price that is getting quoted, spot price, is because of the central banks and the big banks buying the big money. That's what's driving it. So that's who's buying it up. Why? You tell me. There are no Hunt brothers out there buying things to try to corner the banks. There are no, so if you look at the past charts, it's, there's still the financial distress going on and the debt. So I've been long. We're almost 10 minutes, YouTube. Have a good weekend. I don't know when this will get out. Maybe it'll get out tonight. Maybe it'll get out here Friday tonight. But you guys have a good day. Prep hard. Pray hard. Live free.